But the truth is that the money game is designed for us to fail. How many of us feel like the money game is designed for you to lose? Like no matter what you do, right? That you always still in last place. No matter what financial guru you listen to, no matter what wealth building approach you take, you still just over poverty. Like you still just over broke. How many of us can relate to that? How many of us? Let me know in the chat. Can you relate? Drop relate in the chat if you can relate. Let's get it. Let's go. See, we're having a conversation tonight. This is not just about information. This is about a real conversation. We are family tonight. So I want y'all to be responsive in the chat, right? So listen. See, the thing is that the money game is designed for us to fail. It's meant for us to fail. I want us to know that. See, they don't want us to win, but I'm the game changer. Why? Because I no longer work for the banks. I work for everybody in this room. See, the reason why Mailbox Millionaire Banking is so special is because not only did I go into work for the bank, but when I was in the industry, I studied the banks and I studied their ways and I took their playbook against us, but now I use it against them so we can win. See, what do OPM stands for, family? Let me know in the chat. Let me know in the chat. What do OPM stands for? Let me know. Let me know. What do OPM? Okay. Oh, somebody said other people money. Okay. All right, Emily. I see you. See, if you're new to the family, you might think that OPM stands for, you might be conditioned to believe that OPM stands for other people money. But what the banks told me is that OPM stands for our people money. The bank's entire business model is taking our people money, our hard-earned income, and creating profits while they sit back and relax. I'm going to say it again. Do this sound familiar to y'all? The banks take our people money, our hard-earned income, and create profits while they sit back and relax. So let me paint the picture to y'all, right? Let me paint the picture. How many of us could relate to having your 9 to 5, right? You getting up early, or you staying overtime, or you have to report to your boss that you do not like. You missing holidays, you missing birthdays, or you taking on that burden to grow and scale and run and operate your business. Meanwhile, you got to go back to your banker in a nice air-conditioned room, in a nice suit and tie, or they dress in heels, and you got to ask for permission to access capital that you gave them in the first place. Make that make sense. Let me know. How does that make sense? Let me know in the chat. How does that make sense, family? Listen, work harder, work harder, work harder. How many of us was told before that the reason why we're not getting ahead and building wealth is because the simple fact that we just don't work hard enough? Let me know in the chat. Let me know in the chat. Let's get it, Kano. What's up? So listen, we've always been told to work harder, but the truth is that the banks control 85% of our wealth. But do you see the banks working harder? No, they work smarter, and that's how you really build wealth. But the bank is the middleman. The bank is the middleman, and we are the number one supplier to the bank's number one asset. We are the power, people. We are the power. So if we are the number one supplier to the bank's number one asset, then what that make us? Let me know in the chat. What that make us? What's up, Sarah? What's up? What's up? Listen, that make us the plug. See, I'm from Brooklyn, New York. That's why I call myself Mr. Brooklyn Business, because I never forget where I'm from, no matter where I go. So when we're from in my neighborhood, we call ourselves the plug. Not because of anything illegal or criminal activity. It's because it's our nature to want to own our lifestyle. It's not in our nature to have a third party so we can request time off. How does that make sense? We got to go to somebody else to spend time with our family. We going to somebody else and they giving us a salary cap on our income, knowing very well we got unlimited income potential. That's why we hustle. Drop hustle in the chat if you can relate. Drop hustle in the chat. See, listen, I want everybody to drop in the chat the bank's plan. The bank's plan. The bank's plan. Let's get it. Let me see in the chat. Let's get it. Drop in the chat the bank's plan. Drop the bank's plan in the chat. Okay, so it's very important to understand the bank's plan, right? How many of us have a 30-year mortgage or know somebody with a 30-year mortgage, right? How many of us went for funding or was in the process of going for funding? How many of us have a checking account or a savings account, right? See, the bank been working a plan against us, but tonight is special. That's why I wanted everybody to be on this Zoom call, because tonight we're working on our plan. See, the banks been committing capital murder on our money. That'll go over your head, right? But today, we turning the tables, right? That's why I say it's death to the banks, because we got to kill the way that the banks taught us to operate and manage and think about money in order to give birth to real financial freedom, which is the new era of banking, Mailbox Millionaire Banking. So before I get into tonight's powerful message, I want everybody in unison to drop the casket emoji on the banks in the chat. Let's get it. Let's get it. Let me see it. Let me see it. Let me see the casket emoji. I know y'all can find it. I know y'all can find it. Let me see the casket emoji. Sarah, what's up, Steve? Let's get it. Let's get it. Okay, so we're going to get into it. Let me share my screen. I hope y'all excited, because I'm excited. I love doing this. This is what I love to do. All right, so family, drop a 1 in the chat if you can see my screen. Let me know in the chat. Gotcha. What's up, Jamal? How you doing? Listen. See, now I gave y'all my genesis, right? My beginning. But now I'm before you guys with a revelation, right? A truth, a hidden truth. See, I'm a licensed financial advisor now, right? I have 10 years of finance experience. I'm securities industry certified. I got my Series 63, my Series 7. The next time you go to your banker, ask them, have they ever held a Series 7 license? That's the highest license in the finance industry. A lot of people, we underplay having a license in the financial industry. But ask me how much work and how much exams you got to take to make sure you get the right information to the right people, right? See, before I got into the finance space, I actually had my own thing going. I was already an entrepreneur. I was already a real estate investor. And I know the number one rule to building wealth is access to capital. So no, I'm not going to tell you to lock your money up for 40 years. I would never tell you to do that. We need our money now. And we're going to get into that today. See, I literally have $6 million of debt under management. And what that means is that I help people eliminate their mortgage in record time. So I help them convert that debt into equity, but then convert that equity into cash flow, right? And over the last 10 years, I've created $120 million for our community, for black and brown people, right? So I now want to keep on going. So I want to start off with a conversation that I had with my mentor. And I was like, mentor, like why people don't understand the power of controlling their banking functions. And he said, it's simple, because if you don't understand the problem, then you would never appreciate the solution. And I was like, okay, cool. So family, what if everything that you was taught and trained to be true about wealth was a bald-faced lie? What if everything you was taught and trained that was true about wealth was a bald-faced lie? When would you want to know the truth? Let me know in the chat. Now, let's get it. See now, right? So here's what happens. So Social Security filed 100 people over 40 years of working. I want you to understand that Social Security is not a fly-by-night, entity. This is a government agency. Social Security did an experiment, and they filed 100 people over 40 years of working. Out of those 100 people, 36 of them was dead before they was even able to experience financial freedom. Out of the 100 people, 54 of them was broke. When they wanted to retire, they didn't have any money. So they quickly realized that retirement is not an age, it's a financial situation, right? 5 of them needed to continue to work. See, a lot of them, I see that they actually quit their main job and their part-time job become their main job. And they conditioned to believe that that's retirement, right? 4 of them is financially secure. All that's code word for is living below your means. Me working in the banking industry, I've seen people come in and every first of the month, they waiting on their Social Security check. Every first of the month, they waiting on their pension. They waiting every 30 days to get paid one time. Make that make sense, right? See, now only 1 out of 100 people literally build wealth. And then it really hit me, family. This is what they mean. So everybody do the math. What's 1 out of 100 as a percentage? Let me know in the chat. Let me know in the chat. 1%, right? So this is what they mean by 1% information. See, they got us conditioned to believe that what they have for us is information that's going to actually help us build wealth. But this is what they mean by 1% information. What they really mean is that the common way of a building wealth and approaching wealth has a 99% failure rate. A 99% failure rate. You keep doing what your banker telling you to do. You keep doing what your advisor telling you to do. Chances are that you're going to be broke by the end when you're in your 60s or 70s. And that's the truth, right? See, I never forget where I come from. So I really want to let you know that I put my expertise behind finances and I compare it to my real life. See, where I'm from, right? Let's backtrack a little bit, right? So the percentage of us building wealth based upon what the banks tell us, Wall Street tell us to do, we have a 1 out of 100 chance. That's 1%, right? But where I'm from, 1 out of every 3 black men supposed to be in prison. I'm gonna say it again. 1 out of every 3 black men supposed to be in prison. 11 out of every 100 black men supposed to be dead before they're 24 years old. So when I did the numbers and I compared the chances, I have a 3,000% higher chance to experience death or jail before I experience financial freedom following what the banks is telling me to do. I'm gonna say it again. I have a 3,000% higher chance to experience death or jail before I experience financial freedom. This is why it's important for us to unlearn what the banks and other financial experts taught us to do with wealth, because it's not meant for us to win. So we got to go on a transformation. So I want everybody to drop in the chat transformation. We got to go from being a cubicle thousandaire and following a bank's plan to being a mailbox millionaire, right? So being a cubicle thousandaire is a dead-end job. See, outside of all the numbers, outside of the spreadsheet, our most valuable asset, our most original asset that we have that we cannot get back is time. So automatically they want us to have a job. And now we spending 40, 60, 80 hours a week serving somebody else, building somebody else's business, building somebody else's family legacy. Listen, you have to build family legacy regardless. Because if you don't build your own, guess what? Your time will be served building somebody else's. Correct me when I'm wrong. If you don't build your own family legacy, you're going to be sitting down building somebody else's, right? So now your time is tied up to somebody else building somebody else's family legacy up. Now that they tell you to put your money in a qualified account. Do y'all know what a qualified account is? Let me know in the chat. Let me know in the chat what y'all think a qualified account is. Let me know in the chat. What's a qualified account? Let me know. Let me know. What's a qualified account? What is it? All right, Kana, I see you. I see you trying to do working. Okay. Restricted. Okay. A qualified account is a government account. When you give your income into qualified accounts, you are now giving ownership of your income to the government. Do you understand that? You are now giving control of your hard-earned income, your most valuable asset, to the government. Let me know when have the government ever did anything in your favor for your family. Let me know in the chat. But we're so quick to put our money inside of qualified accounts, making it seem like listen, man, my rule of thumb is that if I qualify for anything that the government have to offer me, that means I'm in a bad situation. That's my rule of thumb. If I qualify for anything that the government have to give me, that means that I'm not doing well in my life. That's how I operate, right? Then they tell you to go into bad debt. They give you credit cards and they give you debt, but they don't tell you how to manage the debt, how to understand the debt, how to actually have the debt be an asset to you. All we know how to do is get debt and then have it being a liability, right? But the worst type of debt is the debt that you owe yourself, right? This is not about numbers. See, the debt that we owe ourselves is this. When we go and we have a W-2 job and we spend all our time building somebody else's business up, but we don't own one for ourselves. That's bad debt. Bad debt is when we spending our money, trading our time for money, but when we look at our savings account, we got no money that we own. We still borrowing from somebody else, still borrowing, begging for capital, when we spending all our time, trading our time for money that we can't get back, and we got nothing to show for it, no savings to show for it, no capital to invest in opportunities. That's bad debt, right? So now They don't want us to own any assets. See, let's play a game called hacks or facts. So if I'm telling a lie, I want you to drop hacks in the chat. But if I'm telling the truth, I want you to drop facts. Okay? Okay, family? Is it a hack or fact that if you go to the bank and you tell them that you're an entrepreneur and you need access to capital, they will deny you for funding? Let me know in the chat. Is it a hack or a fact that if you go to the bank and you say you're a real estate investor, that they will deny you for funding? Is it a hack or a fact that if you tell them that you have a W-2 job and you work for someone else, that they will give you all the access to capital in the world? See, it's designed for you not to have anything. They don't want you to have anything. See, the next thing is that they don't want you to have any mentorship. How many of us was told before in our life that experience is our best teacher? How many of us? Let me know in the chat. How many was you told that experience was your best teacher before? Well, I'm telling you now, as a financial advisor, I did the numbers. Experience is your worst teacher. Experience is the most costly financial mistake you could ever do, including myself. Let me know in the chat, family. Drop yes in the chat if you made a mistake in the past that you still trying to recover from financially right now. Let me know in the chat. Let me know in the chat. See, the name of the game is not to learn from your mistakes. The name of the game is to learn from others, other people that you want to trade places with. That's the name of the game. You want to learn from other people's mistakes, not your own mistakes. See, they don't want us to collaborate and be in rooms to build up. They want us to try to do it on our own. And that's the most time wasting, money wasting, financial burden way you could ever do. Then they want you to live check to check. They don't want you to have opportunity funds to go invest into cash flow opportunities. Then they tell you to put your money in a bank account, right? So I'm getting started just now. We got all day. So I'm gonna get into all this stuff, while I'm going forward. But let me go. So as a Mailbox Millionaire, what we do is that we want to stay rich forever. See, a lot of people want to get rich, but we understand getting rich, but we also know that the other part of the process that nobody talk about is staying rich. That's what people don't forget to tell you. Once you get rich, now it's your job to stay rich. And matter of fact, you got to stay rich for the next generation too. So what we do is that we buy cash flowing businesses, right? We leverage and own debt for wealth creation. We're not in debt. We control debt. It's a different conversation. We own assets. We have a financial planner. Do you know that most millionaires, 70% of millionaires in America has a financial planner, right? Has a mentor, has a coach. And we live for the next generation, not just for the weekend. And we do Mailbox Millionaire Banking 101 and 102. Because when it comes to money, financing is I'm honestly biased. I think that financing is 10 times more important than the thing you buy. Yes, you can buy something, but if you buy the wrong, let me know if you're a real estate investor in the chat. Let me know in the chat. Drop RE if you're a real estate investor. Let me know in the chat. Let me know that if you buy the wrong deal the wrong way, how costly it can be over time. Let me know in the chat. Stop me when I'm lying. The way that you finance something is very important, right? So the next thing we want to do is this. I want everybody to define the word banking. What do you think banking mean in the chat? Let me know in the chat. What you think it mean? What is banking? Uh-oh. Okay, Kana, okay. Trap for your money, okay. Saving, okay, Erica, I see you. Okay. Good. So banking is the flow of cash flow, right? So we got to ask ourselves, where is our cash flow going? How many of us, when we file our income at the end of the year and we got to report to Uncle Sam that you see how much money you made, you probably made 6 figures or close to 6 figures or even 7 figures, and you say, I made that much money, but where's it going? Where did it all go to? How many of us can relate? Let me know in the chat. See, that's one part of banking. We got to understand where our money is going. When we understand our money, then we start to turn the corner to really build wealth. They don't want you to understand where your money is going. They want you to be confused. They want you to be a consumer and a victim of banking and not an owner of banking, right? So the next thing is, where's your money located? So family, I want to do an exercise with y'all. So we all have a checking account, right? That's where we normally put our money, right? In a checking account. Family, give me 5 benefits that a checking account give your money right now in the chat. Give me 5 benefits that your checking account give your money right now. So why do we do it? So why do we put our money in a checking account? Huh? Why do we have our money in a regular savings account? Because we're conditioned to do it. Pay bills. We're going to get into that conversation later, right? So now the next thing when it comes to banking is, who is it working for? Let me know in the chat, family. Be honest. When you making payments, right? Think about who you're making payments to every month or every week. Who is your money working for right now? Let me know in the chat. Who is your money working for right now? When you're making payments, who's your money working for? You working for the banks? We're gonna get into that conversation later, right? But look, I did the math, right? This is why I love the industry that I'm in. This is why I would never stop championing, making sure that we understand that we all have to be in the banking industry. Do you know that the banking industry is worth $30 trillion globally? That is one of the biggest industries in world history. Bigger than real estate, bigger than whatever. Banking has always been a big industry. The need for capital, access to borrow capital, to lend capital has always been a need, right? So I did the math. I was like, if I'm smart enough to just own and capitalize on just 0.01% of $30 trillion, I can really be the owner of $3 billion. I'm like, I know I can do that. I know I could just capitalize on 0.01%. Drop a one in the chat. You feel like you could capitalize on 0.01%. If you can't do that, I don't know what to tell you. You're in the wrong room. Listen, sometimes we be playing the wrong game. If we just shift our mentality towards what we already do every day and take control of it, if you just own 0.01% of the banking industry, you're now a billionaire. That's how lucrative and profitable it is when you understand the flow of banking, right? So listen, dollar circulation in our community. This is one principle of Mailbox Millionaire Banking, right? It's very important for us to understand this, right? How many times your money working for you? So let me ask you in the chat, family. Before when you get paid, right? How many times is your $1 working for you before it go out your bank account? Let me know in the chat. Well, okay, listen. So dollar circulation is very important because in the Asian community, their dollar worked for them for 30 days. This is not mythical. This is all factual. Let me know if I'm wrong. When you go to in the Asian community, if you're from NYC, or if you have a neighborhood where they have a predominantly Asian community by themselves, you see that their money is working for them, opening up their schools, their hospitals, establishing their businesses. But where do they actually set up shop with their businesses? Where do they put their businesses at? Let me know in the chat. In our community, right? So when we actually, how many of us have spent our money at a local tailor, a beauty supply store, a Chinese restaurant? Our dollar is going towards them. It is not working towards us, right? Same thing with the Jewish community. See, where I'm from is Brooklyn, New York. Right now, real estate in Brooklyn is booming, right? But when I was younger, when my grandmother had us, right? We was living in one apartment building, right? That apartment building was worth under $800,000. But right now, that building right now is worth over $5 million. So instead of understanding dollar circulation and us pulling our money together to go buy that building, right? We missed out on opportunities to really have that building working for us, getting the cash flow, getting the rental income, getting the tax deductions, getting the equity that we can go build wealth. But in our community, right, the black and brown community, once we get a hold of our money is only in circulation in our community for 6 hours. That's hustling backwards. You cannot work for 40 hours a week to get paid one time and then it be gone in 6 hours and you got to do it all over again. That's not how you build wealth, right? So I want to share y'all, I want to show y'all one thing. So if y'all could make Big Plug the host, let me know if I could do that for me. Team, let me see. Let me know. Let me know. Can y'all see my screen? I want to make sure I'm doing this the right way. Y'all see it? Can y'all see my screen? All right. We good? All right.
Unshare,
Wait,
unshare,
which one? Which one?
unshare your main screen. Just share your whiteboard.
I already shared it already, but let me see. What about now? Can you see it or no?
We see both like half and half.
Oh, I got it. I know what's going on. I got it. Don't worry about it. What about now? You good?
Here we go. There we go.
All right, bet. So we good. We good. So when it comes to our hard-earned money, right, family? Who gets paid first when it comes to our hard-earned money? Let me know in the chat. Let's go, the government. Let's go. So we're gonna do like this. Uncle Sam, right? Now who gets paid? Who gets paid second when it comes to our hard-earned money? Who gets paid second? Creditors. What's up, Tyrone? How you doing? No, no. All right, some people may or may not, right? So some people have a qualified account. Some people have a qualified account. So it may be Charles Schwab or Edward Jones. So we're gonna say Edward Jones, right? Who gets paid next? Who gets paid next now? Almost Tanja. Not yet. Not yet. Who else? Who get paid next? Let me know in the chat. Brian G. Listen. So now we got Chase, JP Morgan, right? Chase get paid because we got auto loans, mortgages, right? We got credit cards, right? Who get paid next? Who get paid next? Let me know in the chat. Who get paid? Who get paid next? All right, all right, all right. So the next person get paid is our friends, right? And family. Let's be real. Who in here give interest-free loans to their friends and family and never get it back? Let me know in the chat. Let me let me know in the chat. Okay, so who's the next person to get paid of our from our hard-earned money? Who's the next person? Who's in last place? Last place? Last place is you. Think about it. And I'm not making this up. Think about it. We earn the income, we taking on the risk to make the money, but we are in the last place to use and leverage our own money. I can't make this stuff up. This is the truth. Let me know in the chat. Drop it in the chat if you're tired of being in last place when it comes to your money. Let me know in the chat. Who tired of being in last place? If you tired of being in last place, drop first in the chat. Drop first. So listen, this is what we do. See, with Mailbox Millionaire Banking, what we do is this. Since we know we got to be in first position, right? Because if you got a mortgage, right? If you got a mortgage or if you do anything with the bank, you already know that the bank always want to be in first position. They don't want to be in second position. Sometimes they do. They definitely don't want to be in third position. They always want to be in first position. Why? Because they have the most ownership and rights to whatever it is. So they want to be in first position every time. So when it comes to Mailbox Millionaire Banking, we are really thinking like the banks. This is not something that we just actually talking about. We playing chess with the banks. So if they want to be in first position with our money, Guess what? We're gonna find a way to duplicate the same exact thing for our money. So what we do is this. What we have now is we have a private reserve account that's away from the banks. And the benefit of the private reserve account, right, is that this private reserve account acts out as our checking account right here. So this is our main operating account. So all of our income goes into this main operating account. So all of our income and our cash flow goes into this account first. It's a private account. First position. So the first thing you're doing is now you're paying yourself. The second thing is this. The second thing is this. It's a savings environment. How many of us believe that your environment will change you before you change it? How many of us will believe that? Let me know in the chat. So what we do is that we know it, we understand this concept. So we understand that the only thing we do when it comes to our checking account is do what? We don't save money in our checking account. All we do is pay bills. All we do is it promotes spending, not saving. So when we have our private reserve account, it's a separate account away from that negative environment, that spending environment. So it's gonna actually increase our savings rate. It's gonna increase our savings rate by at least 500%. Imagine whatever you save on a monthly basis, if you multiply that by 500%, that's what is going. This is what the environment is going to do for your money. It's going to promote positive habits. It's going to grow. And the next thing I love about it is this: that how many of us don't like the budget because you got to worry about spreadsheets. You got to do it consistently. You got to put time aside that you don't have already to look at your numbers. It's so like all your financial advisors are going to tell you to look at your numbers financially, budget, right? But truth be told, we don't have the time for it. But with the private reserve account, we have automatic budgeting. So what's going to happen is that we're going to actually just set up the actual system one time, and the system is going to budget for us forever. All we got to do is set it up what we want to do. Then the private reserve account is going to actually just spit out your expenses to your checking account, and everything else is going to be saved and stored into the private reserve account, right? So that's the power behind step one when it comes to Mailbox Millionaire Banking. And step two is powerful. I'm gonna get into that too. But let me get back to my other presentation. Let me see if I can unshare this. Let me see. So you good now. All right, so all right, let me drop a one in the chat if you can see my original presentation. All right, got you. So we good. So we have to be more intentional when it comes to our money. So Mailbox Millionaire Banking, by definition, so we have to be more intentional. It's the new era of banking. It's banking for entrepreneurs and investors. It's a family banking process to save effortlessly, convert debt into wealth faster than thought possible, and build wealth that the IRS can't touch. That's literally the three main goals of Mailbox Millionaire Banking, right? So we got to add intentionality when it comes to our money. If we don't have our money working for us, then by default, we're going to be having our money working for somebody else, right? And I've created an ebook that really exposed all the problems behind the finance industry. So if you ever want to read that, and it explains really why Mailbox Millionaire Banking is a true solution to all the problems in the banking industry, right? So, right before I even get to this other slide, if your friend came to you and your friend asked you for a loan, could y'all see my screen? Because somebody said they can't see it.
No, we just see you, King. We just see you.
Okay, got you. Let me see if I can unshare it and share it again. What about now?
Yep, we good now.
All right, we're good now. Okay, cool. We good. All right, so listen. If your friend came to you and asked for a loan, how much would you charge your friend? Let me know in the chat. Let me know in the chat. How much would you charge your friend? None? Somebody said none? Why would you not charge your friend? Look, we confused about money here. Like if you are lending your money out, and when you are lending your money out, your hard-earned money out, And your friend asks you for a loan, how much are you charging your friend? All right, somebody said 23%. All right, now we on the same page. Somebody said 1 to 3%. Listen, my friends know not to ask me for money. If you ask me for money, I'm charging you 500%. That's just what it is. Respectfully. So listen. So listen. So my question to y'all family is like, how come we let the banks control our money for less than 1%? If we know that we would charge somebody 20, 30% for our hard-earned money, how come we are allowing somebody else to control our hard-earned money for 0.01%? See, See, when it comes to banking, banking is not for play. It's not a game. This is a business. So when you sign that account, that savings account, that checking account, it's a contract. It's a contract of you allowing the banks to lend out your money, right? They lend out your money. So fractional reserve lending is a banking system that the banks are created on where they have the ability and the authorization to lend out 90% of our money at any point in time. Any point in time. This is how they actually create wealth because they can lend out the same dollar multiple times, right? So let me see if I can go back to my whiteboard real fast, real quick. Let me see if I can do that. Let me know. Can y'all see my whiteboard? Let me know in the chat. Can y'all see the whiteboard?
Yes, we could see it.
All right. So this is what. Sorry, I'm a financial advisor, family. So I love numbers. So I got to show you the numbers. So bear with me. All right. So listen. So fractional reserve lending, right? But this is how we beat the bank, right? So fractional reserve lending. So let's say that the bank give us 1% on our money, right? So let's say that the banks borrow. Let me see. Hopefully I'm spelling this right. Let's say they borrow our money and they borrow at 1%, right? And let's say through mortgages, through credit cards, through auto loans, through personal loans, let's say that the bank make a spread of 10%. Let me know, family, what's the difference? What's the difference between 1% and 10%? Let me know what type of spread that is. 9%, right? 9%. So to the regular naked eye, you might think that the banks are getting a 9% return. But let's think about it a little bit further. Do you really think that the banks is only getting a 9% return? Do you really think so? Like, let me know in the chat. Do you really think that the banks is doing all this for just 9% return? No, right? So the reality of it is that, see, 1 and 10, right? What they're doing is 10% is basically 900% higher of a return because all they're doing is what they have is 1% of equity inside of the loan itself. So they controlling our money for 1% and they loan it out for a 10% spread, right? So in actuality, they are actually getting 900% return on their money. 900% return on their money. And what they do is this. This is only one consumer. This is only one consumer. So imagine if you have another consumer to do the same exact thing with another 900% return, right? And then you have another one with a 900% return, right? They have a 2,700% return over 3 people. Now, how many depositors and consumers do the banks normally have? Let me know. Let me know in the chat. They have a. This is what they do. But you know the reason why that they are actually able to get 900% returns? Let me know in the chat. Let me know why you think that the bank is actually able to get 900% returns. It's a lie that they told us that is not true. Like I said before, it's a lie. It's something that they condition us to do that is not true. What the banks do is that the banks invest for cash flow. When they take your money and loan it out in the form of a mortgage, they getting payments back in the form of cash flow. When they give you a credit card, they get payments back in the form of cash flow. When they give you a personal loan, they getting payments back in the form of cash flow. I want to share this with you because I want you to know that what we do as Mailbox Millionaires is not just because of we thinking that this is what works. We know we studied the banks and we studied the wealthiest institutions and the wealthiest people that it's not about rate of return when it comes to your money. It's really about cash flow. And I wish I had more time because really our money is more valuable right now than tomorrow. But they condition us to have our money sitting in an account getting a small rate of return and tell us to wait for 40 years. But they're using our money right now. It's a reason behind that. Don't think that the banks is ever doing something because everything that they do is intentional. But guess what? The exact same principles, the exact same understanding is exactly what we do. So that's why we actually invest for cash flowing businesses and cash flowing opportunities. Right? When you invest in cash flow, you're able to get these types of return on your money. So let me see if I can go back. All right, so I know I'm giving out a lot of games, so let me speed this up. Y'all good? Let me know in the chat. Y'all good? All right, hold on. All right, so here we go. So fractional reserve lending, right? Fractional reserve lending. This is what the banks condition us to do. So as a customer, we open up a savings account after we did our due diligence and saved money, and now we have $10,000 saved up. We open a savings account and they give us 0.22% interest. We don't object to it. We don't ask questions. We just sign it and don't care about it. Then what we do is that we go put our money in a savings account and they start immediately using our money. And then now what we do is go back and ask them for a credit card. What they're gonna do is give us back $9,000 in the form of credit, right? But then now they're gonna hit us with a 22% interest rate. Look at it, family. They give us 0.22 on our money to control our money. But when we ask for a credit card, when we ask for money from them, they charge us 22%. That's that that's almost 10,000% higher. Listen, imagine if there was a way where we could actually have the same exact strategy on our everyday finances. Imagine if there was a way where we could actually have those types of returns on our money and not the other way around. How much money we will be able to accumulate over time if we keep building wealth this way, doing it the same exact way that the banks taught us to build wealth, study the banks and apply it to our everyday finances. See, now what happens is that not only that, right? Not only the interest, now the bank have made almost $2,000 in cash flow off of money that we gave them in the first place. And then now, guess what? They got a partnership with Uncle Sam. Uncle Sam going to get his money right now in that same year. Now, this is all true. Now, I wish I had enough time because I could go into taxes too, and I could show you how the banks and the IRS really got it out for us, but I can't even do that. That's a whole other conversation, right? So this is what the banks do. So let's say we got that $9,000 credit card and we don't pay it off in a year's time, right? So now we getting charged 22%, right? So what they want us to focus on is just making the minimum payment. But what a lot of people don't understand is that when you're making that minimum payment, that money is going towards the bank only. 99% of that payment is going towards the banks. Going towards the banks. So what happens is this. So where is it at? This is the point. This is the amount that they don't want you to focus on. They want you to focus on what you owe them and your minimum payment, right? So you paying that $200 monthly payment, thinking that you're getting ahead, but you slowly getting your wealth drained from you because you don't understand how this works, right? So now over the time of you making them payments back, you not only pay back $9,000, you pay back a total of $14,000. Now imagine if we had the ability to do the same exact thing for our money. And this is what Mailbox Millionaire Banking is about. right? So what we do, we flip the tables on the bank. So what we do is that we go to the bank and we build that relationship with the bank, and we get 0% credit cards for maybe 18 months. And what we do is that we start our own family bank. The reason why we start our own family bank is because we're playing the exact same game that the banks is playing. We know that the banks are in control of the money that they give us. So when we actually get a loan from the bank or any type of credit from the bank, we know that the bank can call that loan due at any given time. Do you know that? How many of us know that? How many of us know that any loan you get from the bank, that they can call it due at any moment? Tomorrow they can call it due. And if you don't actually pay back that loan in full, they can damage your credit. How many of us have a credit card but they lower your credit limit because you did something that they didn't adhere to or they didn't like? So we move with speed and we put the money inside our own family bank. So let's say if we get $100,000, right? What we're going to do is put the money inside our own bank, and now we get a 7% return on average, which is tax free. And then what we do is have that money growing and compounding for us, not the other way around. So we can have their money that they give us at 0%, but it's grown for us for 40 years. And now we just created $1.6 million in tax-free wealth that we can leverage, and created a $3.5 million death benefit. So if anything was to happen to us, our beneficiaries would get $3.5 million, and we can use the cash value right now in the flesh to go invest it for cash flow. So what we do is that now we use our cash value and we get a loan from the insurance company itself. So let's keep it simple, right? You have to fund the policy first. You can use the bank's money to fund it. Then you borrow from it. You can borrow from it within like 30 to 45 days. Like, so if you're an entrepreneur, just to give you some game, you might want to go with a whole life policy, because what you could do is get an equity line of credit, which is totally different. I can't get into all that right now. But if you're an entrepreneur and you want faster access to capital, you want to get a whole life policy. So what we do now is get a cash flowing self-storage facility that's cash flowing $100,000 per year, right? And this is how we actually start doing exactly what the banks do, but have it done in our favor, right? And let's say if somebody's saying, okay, how you pay the credit cards back? We actually have a software that keeps track of our lending and our borrowing, so it can cancel out all the interest that the banks think we might pay. But we have that software working for us, doing exactly what the banks do, but it's working for us. That's a whole other conversation. So, so long story short, I got this whole thing wrapped up. This is a complete way of how we beat the banks, right? So what I say is that we are slaves to the banking industry. In order to correct this issue, we must become masters of borrowing and lending. This is what I do. I'm a master of borrowing and lending. Like, when you really want to take your access to capital capacity to the next level, and you really want to actually get to the closing table, you come to me. That's what I do for a living, right? So this is what I want to show people. People are so confused about life insurance and so hesitant on thinking about how much does it cost to get a life insurance policy. But the most wealthiest banks in the world have bank-owned life insurance. Why in the world the banks is not asking how much the insurance policy costs, but we got the nerve to think that how much it costs? There's a difference between a destructive expense and a productive expense. If life insurance was such a bad thing, then how come the biggest banks in the world, their tier one assets, which is the assets that they can't afford to lose, is inside a life insurance policy? Why do y'all think that? Sometimes what we might know about wealth, we might not fully understand, but sometimes you gotta actually just emulate the most wealthiest institutions. And what we do is that we know that the banks is literally the most wealthiest institution in world history, and all we're doing is doing exactly what the banks do, but we applying it to our everyday lifestyle. So if the banks is putting their money inside life insurance, best believe I'm putting my money inside life insurance. Why? Now I know why the banks do it is because it grows tax free. That's a whole other conversation. I can't really get into all that right now, right? So the effects of the pandemic. A lot of us, we normalize the fact of having our money inside of banks because it's deemed as a safe asset. But when you look at the grand scheme of things, in the pandemic, 4 major banks literally went out of business, right? Think about it. So how safe is our money when four major banks, Silicon Valley, which is a major bank for startups, went out of business, right? Two banks needed to get bailed out. That means that if these banks didn't get bailed out by the federal government, we would have went into a depression. We would the economy would have collapsed, right? Over $151 billion of deposits was lost because of the banks being over leveraged. And then on average, the bank gives a rate of return of 0.22%. But when you look at insurance, this is why the banks put their money inside life insurance, is because during the same exact conditions, the same exact environment, the bank insurance companies did not collapse. In fact, they was able to pay out $91 billion in death benefit. Why? I'm gonna get into that a little bit later. But on average, they was able to pay out 4.1% of tax-free dividends. Tax-free dividends. And that's over 1,900% higher than what the 0.22 is. You can do the math later, right? So the difference between a savings account and the cash value life insurance policy, right? I want you to understand that the banks know about cash value life insurance. They're not doing nothing and saying like, oh, I don't know this, so I'm not going to offer it to you. They're not in partnership with you. When you have your money inside life insurance, they become a partner of you. So that means that when they profit, you're going to profit, depending on what type of insurance carrier you use, right? So let's get a savings account, and let's say that the savings account give you a rate of return of 0.22%. With inflation, which is a silent wealth killer, let's say that the inflation rate is 4%. So if you're getting a rate of return of 0.22%, but your inflation rate is 4%, you have a negative rate of return of 3.78%. That means that the buying power of your money is now getting smaller and smaller over time. You're getting poorer and poorer, and they don't tell you. If this don't tell you that the bank is not on your side, I don't know what to tell you. Let me get this out of the way. Do this again. So listen. So now another thing about savings accounts is that you got to actually pay taxes on the interest income you receive. Uncle Sam want to get his cut. So the banks that you bank with is in partnership with Uncle Sam. When you put your money inside life insurance, it's a private reserve. It's a private contract between you and the insurance company. They do not have any partnership with Uncle Sam. You get what I'm saying? The worst thing I hate about savings account is that it's a public asset. That means that if you get sued by any creditor, they can freeze your account. They can actually sue you for what's in your savings account. They can sue you for what's in your checking account. But you know what? With a cash value life insurance policy, you have creditor protection in every state. It's an invisible asset. It's basically setting up a trust for your money. If this don't convince you where you should put your money, then I don't know what to tell you. On average, you're getting a 40 to 60 times higher rate of return than what you're getting on the bank in the bank. So come on now, what are we talking about here? So so now, excuse me, family. So now amortization, right? I know stick with me, family. So I'm almost done, right? So amortization. The reason why I gotta put this in the my presentation is because when we actually acquire mortgages, our mortgage is one of our biggest financing tools that we will ever have. And a lot of people don't understand it, right? So when you see the word amortization, what is the root word of amortization? What do you see? What do you see? Mort, right? What does mort mean? Death pledge, right? This is all facts. Stop me if I'm lying. So most loans, most products that the banks will give you is an amortized loan on an amortization schedule, right? And if you don't know how an amortization schedule or amortized loan even work, you're gonna be losing wealth automatically. You'll never be able to build wealth for your family, right? So let me show you guys this one thing. So you see right here. So let's say I can see my screen. Let me know in the chat. All right, cool. So listen, This is why what we do, we are able to to acquire assets and to build wealth different from a regular average individual because we understand how amortization work and we understand how these loans work, right? So if you just have the naked eye, you don't understand how the banks work, you're gonna look at this payment and think that, okay, I can afford this payment, right? At a 6% rate. If I'm paying $1,800, I can actually, that's something I can afford. But that's playing exactly into the bank's hand. The banks want you to feel like you can afford it. Why? Because they don't want you to default, right? They want you to have that liability for 30 years. Like, why would they want you to not afford it? But what they don't want to tell you is there's a part in your amortization schedule. It's called truth lending statement, and they tell you exactly how much you'll be paying in interest over the life of the loan. So yes, they're going to show you 6% amortized, but over the life of the loan, you're going to be paying over 54%. So if you buy a house that's $300,000, you're going to be paying an interest $347,000. Not to mention you got to pay back the initial principal. Look at this. Look at that. Look at how much. How much? Let's go to the monthly. Let's go to the monthly. So let's say our monthly payment is $1,798. Our first payment to the banks, interest is going to the banks of our $1,700. $1,500 is going towards the banks. Does that sound to you like a 6% interest rate? 6% interest rate. Let me know in the chat. Only $298 of your payment is going towards what you actually borrow. $1,500 is going towards the bank. Let's see when you will start to actually break even. You will start to actually break even in year 20. You would listen. See, it's not just about, yes, we want to actually create more money, make more money, but a part of the equation to build wealth and to create family legacy is about how much money you can keep. This is why we dominate when it comes to wealth building, because we know exactly what assets to buy, but also we know how to actually convert that mortgage into an equity asset that we can actually go leverage multiple times again. We don't abide by the bank's plan. We do things our way. And all you gotta do is actually know how, have the strategies. You don't have to sacrifice. All you have to do is know how money works. You don't have to do anything different. All you have to do is understand banking principles and apply it to your everyday finances. And I guarantee you will start to create wealth. So what we do, the reason why we such a fan of canceling out interest is because if I'm able to cancel out $300,000 of interest, that can go towards my family bank. If I'm able to eliminate this mortgage in 3 to 5 years, I can use the next 25 years to go pay my family bank. You get what I'm saying? So that's very important to understand. I hope that don't go over your head. So So this is the benefits of when you finance and using Mailbox Millionaire Banking. When you actually take the strategy that we teach, you're going to actually increase your positive cash flow. It's not about how much money you're making. It's about what you're doing with the money. It's not about how much money you're making. It's about how much do you know your money very well. A lot of us don't know our money that we have now very well. A lot of us, we focus on the money we don't have. Need to start focusing on the money we do have, right? And if we did that, how much of a difference it could be when it comes to building wealth, right? So we do both. So I'm not saying we don't actually go out and make money, but the next equation is about keeping it as well too, right? So we're gonna actually create positive cash flow by getting rid of bad debts. We're gonna build our credit up because we're gonna pay off the debts and so well and leverage our credit the right way to where we're gonna have more access to capital going forward and our credit is gonna actually go up. Trust me, ask me how I know. Then now what we're gonna be able to do is buy homes, buy investments with a low interest rate. Imagine every time you finance something that you was only paying a 1% effective interest rate. Imagine that. How much control do you have over your future if you knew that every time you finance something, you was gonna pay a 1% effective interest rate? This is the type of comfortability that we have because we know the strategies. This is why we're comfortable sitting in first place because we know this already. We know this already. So we know what to buy, Also, we know how to actually put everything in motion to make it work for us, and we're going to do the same thing over and over. This is only one strategy that we teach. We do other things as well too. See, we buy cars at a low interest rate. So now we're able to actually have options. We could borrow from our policy, or we could use the bank's money, right? We can say I have this much collateral in my life insurance policy. If you want me to use your money, you're gonna have to meet this interest rate, or you're not gonna get my business. That's power. That's control. You can start a business. You're eliminating bad debt. You can pay off a mortgage. You just increase your overall financial reputation with banks and stuff like that, right? And cash value life insurance. See, I love cash value life insurance because when you put your money inside this vehicle, you give your money 11 different benefits. So now your money is working just as hard as you. So what a cash value life insurance policy is a private and permanent account between you and the life insurance company, and it gives your money control. It gives you control. So the importance of control is the fact that if an opportunity of a lifetime come across your desk and now you have money to take advantage of the opportunity, that's important. You don't have to go and qualify for a loan. You don't have to go through underwriting. You don't have to worry about if the banks is tightening their financial restrictions because of the economy. You can literally take the money out for whatever reasons, no credit checks. I don't know about you, but I'm in a state of my life where I appreciate that. Now, diversification. A lot of us, when we have our money in the market and the market is tanking, the only thing we can do is keep our money in there because we're gonna realize a loss. And we don't take our money, if we take our money out the market, we're gonna lose that money. And then also we gotta report any type of capital gains to the IRS. And now we're getting hit with another taxation. So when you have your money inside a life insurance policy, you separate your money from real estate, you separate your money from the stock market. That's true diversification, right? What you can have, depending on your risk tolerance, you get aggressive compounding too. You can get tax-free growth. You get no market risk. You get upside growth potential, right? You get collateral for funding. You can get interest. You can get an interest-free loan from the insurance company. Think about this. The insurance company have a way where you could borrow their money, and when you pay them back, they give you a credit of the interest that they give that you charge them. So it's a net zero. Let me know what bank will give you back the credit of interest that they charge you. Let me know, right? Also, you're gonna have liquidity, so you can use the money for any reason. You don't have to qualify for a hardship. You don't have to qualify based upon the government. You can literally use it for any reason. You get the tax-free death benefit. That means that you can start transferring down wealth to the family tax-free. Like I was speaking to Mo the other day, right? And this is how far we came when it comes to building wealth. Because I'm like, bro, do you know that we at a point in our life where we gotta pay like death tax? And he was like, yeah, I heard that before. Like I know that, when I set up my trust, you gotta pay estate tax. But in my mind, I'm getting excited because I'm like, yo, we at a point to where we have to consider estate tax. I don't know about y'all, but I'm happy. That's a good. I like to have that problem. Like now we got so much wealth, so much accumulation of assets that now the next level for us is to figure out how to offset estate taxes. But life insurance actually allows you to offset that liability to where you can pass down the same amount of wealth that's going to bypass the estate, but you got to be able to do that. So that's one of the reasons why the death benefit actually come into play, because it allows you to offset that tax liability that Uncle Sam is going to give you once you get to that point. So because everybody in this room is going to get to that point. So don't think that it's not going to be you. Last but not least, terminal illness coverage. The death benefit is not just for you. It's just for the next generation. It's for you too. A lot of us, a lot of people I see, sometimes we get a scare and we get cancer, and now we uninsurable to the insurance company, or we get a terminal illness to where we gotta actually need more capital to do a miracle drug or pay off our expenses. So the death benefit is not just for the next generation; it's literally to protect against your health too. If you end up in a situation where you have a terminal illness or chronic illness, the death benefit is something you can access to actually support your lifestyle, right? So a lot of us, we focus on the death benefit thinking that life insurance don't benefit us right now. But one of the things I love to do, and one of my clients did, was that she refinanced her car note and used her insurance company as the lender. So what she did was that she actually took her money in her savings account, right? And I think her car loan was $10,000 left over. What she did was that she put her savings inside of the policy, and now her money is growing like she never touched it. She's not missing out on any opportunity. But what she can do now is use that money as collateral to go pay off the car loan existing. So her car interest rate at the time was a 15% interest rate, and the insurance company's interest rate was a 5% interest rate. So her payment towards herself was actually lower, and she was able to pay off her auto loan quicker on her own payment schedule. She didn't have to qualify. She didn't have to make monthly payments. She can do things on her own, and she was able to do this. Imagine not having a reoccurring bill that you can use that money to go build wealth. So what she did, in fact, was to use that money. It was about $1,000, and what she did was set up a family bank for her son, and her daughter. So this is the power of knowing cash flow and understand financing principles. The fact that she had a paid off car free and clear, and she was able to recover $1,000 and to actually create wealth for her family long term, so they can have something for when they want to get older, whether they want to start a business, finance a car, things of that nature, right? Another person who was able to clean up his credit report, eliminate debt. And this is something I was just talking to him in passing, and he told me that he used my strategy to eliminate debt, and his credit score jumped up almost 65 points, right? This is all real facts. I want you to know that when we talk about Mailbox Millionaire Banking, this is not just about life insurance. Yes, it's the best vehicle for our money, but this is what it is when it comes to making sure that we are in position to go do bigger things. We got to be able to have the right credit. We got to have control of our cash flow. We got to have savings. We got to have these things to go play the real game that the wealthy play. If we don't do these things, we'll never get to the next level. Another person literally put her money inside an IUL, borrowed from it, and bought a cash flowing business from day one. So I wanted to show you that these are literally examples of how we actually use life insurance for right now to build wealth, not just in theory, in real time. In real time. The Rockefeller method. So we can all apply the Rockefeller method to our everyday finances. We can do the same exact thing. The only thing we have to do, obviously, have a family legacy meeting. We get the eldest person with the best health, and we have to split the cost, right? If you split the cost, it could be like $1 million death benefit, and it probably costs you, let's say, $12,000. Don't quote me, right? So what you do is just split that cost. But what you're gonna get is $1 million tax free, depending on the age. This is case by case, right? But you can do this. You can start literally building wealth and making sure that the next generation is gonna be able to build something sustainable and wealthy just by doing exactly what the Rockefellers have done. And all you have to do is do this for a minimum of 5 generations. My mentor, right? My mentor literally got to have 77 life insurance policies. He owned 77 life insurance policies. That's my goal. Honestly, that is my actual family goal, is to literally have us own 100 life insurance policies. Because that's an indication of how much wealth we're able to keep in our family, right? So to figure out how much life insurance you need, because with the infinite banking concept, you want to reduce the death benefit, but you also want to make sure that if you're a high earning income earner, you definitely want to have at least 10 to 12 times your annual income in life insurance. No, you don't want it in the same policy. You want it separately, right? But you want to always have 10 to 12 times your annual income in coverage just in case a premature event. So it's death to the banks. So listen, I know that we all want to win the money game, right? And I want to say this before I wrap up. Let me see if I could stop sharing my screen. So we all want to win the money game, but the truth is the money game is rigged and it's designed for us to fail. It's meant for us to lose. We can't win the money game if our income, our most valuable asset, is working for the banks, working for the IRS, working for Wall Street, before we even able to use it. Because now we in the rooms where we could do exact same thing that the banks do, we could do for ourselves, right? If we know how. So Mailbox Millionaire Banking is a framework that takes the same exact playbook of the big banks, but it trains your money to work for you, away from high interest fees, away from taxes, away from hidden overdraft fees, things of that nature. So if you want to really build wealth, Mailbox Millionaire Banking is the way to go. Rest in peace to the bank. Let's get it.
Oh man, hold up, hold up, hold up, hold up, hold up, hold up. Let's bring you back up. Bring them up, bring them up. Spotlighter. Oh man. Listen, they know who is who. They say, is that Mogul? Is that who is that? Yes, they don't know who's who at this point. Look, I need everybody to unmute, and I need y'all to make some noise. If y'all felt like this was super valuable information and 1% information, I'ma unmute. I need to hear it. I need
Oh,
to.
you already know. You already know.
God.
Yeah, let's go. Yeah, let's
Let's
go.
go. Let's go. Let's go.
Boy.
I love it.
Financial
Let's go,
literacy
let's
on
go.
crack.
Hey, hey.
I
Ah,
love
let's
it.
In the
go.
house.
Keisha,
Hey.
good
Let's
job.
go.
Hey,
Hey.
love it, love it, love it.
Let's
Hey,
go.
like
Hey.
always.
I coming with that type of
Like half the
Oh,
time.
It's always good.
need some of that knowledge.
Listen.
Vitamin.
Thank you, Mr.
Fire.
Brooklyn
Uh,
Business.
All
right now.
All
right.
right.
Hey, up. Let's
Hey,
Thank you.
hey,
it's all
go. The love is real, bro. I'm super proud of you. Can y'all hear me? Cause make sure we all good. There we go. There we go. We all good. I'm super proud of you, bro. I'm very, very proud because I watch you really be a student of the game, practice your craft, and really stay up long nights learning and studying, taking different exams and different classes to really perfect this information, not only for yourself, but everybody here on this call. And everything that you're teaching, I want everybody to understand that I'm living proof of that, y'all. I'm living proof. So yesterday when we talked about getting together and having these family legacy meetings and investing the money to have each person go and get a skill set, this is the proof. So everything that we're sharing you is not theory. This is not real life. This is my blood brother, my twin brother. I'm 3 minutes older. I take that serious. Y'all. I take the big bro serious. I'm just saying y'all know now. You know what I'm saying? But what I'm sharing with you is we are truly building family wealth, and it's the blueprint that we are giving you in real time. So y'all actually get to watch and see it happen in your face in real time and learn the game. Who in here? Put a one in the chat if you watch football, you watch basketball, you watch baseball, you watch boxing, any type of sport. Imagine if you was able to watch LeBron James play, but at the same time, he tell you how he's actually about to go on this cut and how what pass he about to make and what play he about to run. How powerful would that be? Let me know in the chat. How powerful would it be if you had Floyd Mayweather in a ring at the same time he's boxing, but he's telling you what move he about to make? Giving you the whole blueprint. That's what's happening in real time right here. So I want to shout you out and give you that love because you definitely deserve every bit of it. So I'm going to let you go take a break. I want to bring you back up for probably about another maybe 10 minutes to answer some questions because I know that I got some questions, y'all. I know you got some questions. Take a break for like 5 minutes, go wipe your face. I know what it takes to really put together a presentation of this magnitude, but I had to shout you out, all right? So I'm going to give you a little break and I'm going to bring you back up. So just text me when you're ready to come back up. If you, matter of fact, let me know in the chat, what was one word to describe tonight? Somebody said, Connie said, how much does it cost to join? Like she already asked, like, yo, what's next? What's next? We on day 2. Connie said, what's next, man? Matter of fact, if you feel like you need more, type more in the chat. If you feel like, yo, these two, like it's just 2 days and like that's too, I need a lot more. We got 1 day left. So I'm going to give you an opportunity to be able to work with us a little further, to be able to really get some strategy, jump on a one-on-one call with Mr. Brooklyn Business, because financial literacy and financial planning is not a one size fits all. Everybody has a certain path that they need to go on. So I want to give you an opportunity. Do I have your permission to give you an opportunity to be able to work a little closer with me and my team, Mindset Mogul, the entire coaches, to be able to really help you get to that next level before the end of the year? Yes or no? Just let me know. Just let me know. All right, they said yes. They said yeah. They said hell yeah. All right, perfect, perfect, perfect. So look, what I'm gonna do is drop an application first because unfortunately we cannot take everybody with us to the next level. because we are not focused on quality. Quantity. We are focused on quality. Somebody type quality in the chat. Somebody type quality in the chat. We are not focused on quantity. We are focused on quality. Even when you do your family legacy meeting, everybody can't go. You have to be okay with saying, look, if it's just 3 of us, well, we're going to make sure we stand up. We're going to show out and go 100%. So I want to make sure that you are qualified. And at the same time, we wanted to give you this experience so you can really see if we're qualified to help you get to that next level, because there are a lot of people that's teaching stuff online, but they're not teaching what we teaching. Can I be honest with y'all? Can I tell y'all? And you let me know if you feel like this information that you learned today that somebody else is teaching, and let me know. I promise you're not getting this type of information the way he packaged it up anywhere else. And I'm going to tell you why. Because we are doing this in real time. A lot of people that's online, they just telling you what they heard and regurgitating and what they YouTube and what course they bought and how they just took the information, and we really live it in real time. And that's why we like to put these things on display. So I'm going to give you an opportunity to work with us. But like I said, there's going to be an application, and we only have 20 spots available. 20 spots. Somebody type 20 in the chat. Somebody type, I want to make this very clear. So as I drop this, application, right? It's not a long application, but if you do not apply, you won't even hear the opportunity that we do have for you. All right, I want to make it clear. So if you are on the fence, I encourage you to at least apply. Don't count yourself out. We're going to be up all night. Myself, Mr. Brooklyn Business, Mindset Mogul. We're going to be going through the applications. And then you're going to hear from my team tomorrow via text or email or phone call, letting you know if you have been approved and what the next steps are. If you have not heard from us, that means that you were not approved. Does that make sense? Just let me know in the chat. If you have not heard from us, that means that you were not approved. So this application is for you to apply if you are interested in more mentorship with us, so that we can help you build out your financial plan, help you be able to buy cash flow in business, help you be able to set your family up for future success. All right, so if you're ready for me to drop the link, I want you to type drop the link in the chat. If you're ready for me to drop the link, I want you to type drop the link in the chat. And no, this is a new application. I'm going to drop in there. This is something different. So we have a grant application that we dropped earlier. That's a grant application. And we're going to announce the grant winner tomorrow night. This is a separate application that we're going to drop right now that's completely different, all right? So you still want to apply for the grant. You want to make sure you apply for this. We're still going to announce that tomorrow, all right? So let me see y'all. Put drop the link in the chat. Put drop the link in the chat. Yeah, I mean, let us know. Let us know. All right, cool. So team, let's get the link ready, team. They want us to drop the link. So we're gonna drop both links, but first we're gonna drop the application link, and then we're gonna drop the grant link as well. Now you have to apply for both if you want to qualify for the grant. So let me just put that. You have to apply for both if you want to make sure you qualify for the grant. Is that clear? All right. So team, can we get that link? Can we get that link in 5, 4, 3, 2, 1? Drop the link. Let's go. The link is right there in the chat. And team, can you also post that link inside the Telegram? So they can actually apply? Now, again, tomorrow, we're going to have a call where I'm going to actually explain what the mentorship is about, everything that you get, the transformation. I will talk about the investment. I'm going to give you all of that information tomorrow. But again, you will not even know about it if you don't apply. So I want to make it very clear. At the very minimum, give yourself a chance to win. If you know that this information has inspired you, if you know that these last 2 days have motivated you and you've made the most progress these last few days than you've made in the last few months, then it should be a no-brainer to apply. And I really want to kind of, before I bring Mr. Brooklyn Business back up, we're going to open up for a few questions. Can I get about 10 more minutes of your time? We're going to do about 10 minutes of Q&A. And typically we don't, but I know earlier with Ty, she went a little over. She didn't get a chance to do Q&A. So we're going to do a little bit of Q&A right now. So I need about 10 minutes. Let me know if I get 10 minutes of your time while y'all going to apply. While you're going to apply and make this stuff happen. And I want to share this in real time because some of you probably watched my video yesterday. Some of you watched my video where I bought my Lamborghini, right? And I shared this story. Lamborghini is cool. This is the funny part. So I remember when I used to tell my dad, I'm like, yo, dad, you know, I'm about to go buy the Lamborghini because that's all I always wanted a Lamborghini. So I'm telling him I'm about to buy this Lamborghini. And he laughing at me like, yeah, son, yeah, okay, you ain't buying no Lamborghini. Joking on me, right? And all my friends, they kept driving. When we used to go out, I had a what you call a Kia Rio, white Kia Rio, 2016. And everybody used to joke on me and say, yo, you driving in that go-kart? You driving that go-kart? And they was driving in Range Rovers and Infinities. But I said, no, I'm gonna wait my turn. Somebody type turn in the chat. See, everybody out there, it look good, they speeding, but I'm gonna do it the right way. I don't want to do it in a rush. I just want to do it right. Let me go buy some assets. Let me go buy some properties. Let me become the person that earns the right to be able to go get a Lamborghini and not even sweat. So I did all of this work and I bought the Lamborghini and I'm hyped and I'm jumping up and down, right? And I'm telling my wife, listen, my sons, they better not step foot in this Lamborghini. I don't want no French fries back here. I don't want no crumbs. I said, I don't need nobody in here. This is for me. You know what I'm saying? I'm like, y'all, it's not happening. And guess what happened 2 weeks later, y'all? 2 weeks later, after I done got the Lamborghini, my sons are in there with cracker crumbs all over the car, all over the seats, handprints, like all that went out the window, right? And I'm sharing this because at that moment I realized, like, wow, getting the Lamborghini was a moment. It was just one little tiny moment. And it's not even about the Lamborghini itself. It was more about the process that it took for me to become the person to be able to earn the right to get the Lamborghini. Does that make sense? So I'm more excited about me going out there and buying properties and building up my portfolio and making sure my net worth is right, my insurance is right, making sure my credit is right. I'm more focused on the process and the person that I had to become because now that I got it, I'm like, I don't even really drive it no more. Does this make sense? And my uncle told me this. He said, look, never, ever look. This is what he said. I want y'all to pick this up. We all got uncles, grandparents, and all that always drop this game on us. He said, success lasts a moment, but regret lasts a lifetime. It was going over my head. I want to say it again. He said, success lasts a moment, but regret lasts a lifetime because that one moment of success, yeah, you'll be excited, but the next day comes. But if you decide not to do this, you got to live with the regret every single day of your life with the decision of you walking past the opportunity you knew was for you. And you don't want to have that burden because you've been praying to God, asking for him to give you a sign. Most of you or all of you on this call, you've been asking for a way to learn how to make some new money. You've been learning how to get your family on board. You've been asking to learn how to really manage your finances. You here because you are looking for the information. This is not a mandatory thing that you have to show up to. You're here for a reason. So you showed up here because you prayed for the opportunity. But when we pray for the opportunity and God gives it to us in the form of a message or a form of a way that you may not expect it to happen, you cannot talk yourself out of your dreams. Are y'all with me? This is not a coincidence, it's confirmation. Somebody type confirmation in the chat. Somebody type confirmation in the chat. So when I'm talking about applying and we only taking 20 people, I want you to have that in your mind and say, look, God put me here for a reason. I've been looking for ways to create some more money. I've been looking for ways to make sure my son and my daughter is set. I've been looking for ways to plan for retirement. This is your opportunity. All right? So if you applied, I want you to type apply in the chat so I can shout you out. If you applied, I want you to type apply in the chat so I can shout you out. Shakur applied. There we go. Shout out to you. Shout out to you. Sarah applied. Shout out to you. That's what I'm talking about. Donna applied. Shout out to you. Tanja applied. Ariel applied. Connie applied. Shout out to you. Congratulations. Congratulations. I promise you, this is the first step and you have many more steps, but it starts with really putting yourself in position. Fanny, congratulations. That's what I'm talking about. Miss Kennedy, congratulations. And I'm gonna bring you up actually because I want to talk to you. So, Mr. Brooklyn Business, where you at? Can I bring you back? Now that we got that out the way, can I bring you back? Where you at, bro? There you go. So look, before we get into Q&A for about 10 minutes, I want to make it very clear. Tomorrow is the last day. So we have our 8:30 a.m. leadership call with Mindset Mogul, the third of the Mogul brothers. And then we have our work group session at 1 p.m. with Auntie Shaky. She's going to teach you Faceless Life Insurance. And then we have later on that night, yours truly. Yeah, I get to come and bless y'all with some investment strategies. So lock in. And at the end of that class, those of you that have been approved, that is when I'll be sharing all the strategy, all the information and details in regards to the mentorship. If y'all got that, put got it in the chat. So to make sure we all good and there's no confusion and we are all on the same page. All right. So Mr. Brooklyn, raise your virtual hands and we will come first serve basis. And we got 10 minutes. So Sunshine, hold me accountable. We're going to close this up at 10:15 because we know everybody got life and things they got to get into. So first and foremost, who we got up? We got my big bro, Steve. What's up, Steve? Talk to us.
All right, can you guys hear me? There we
Loud and
go.
clear.
Cool. Hey, another incredible sharing of tremendous gems there, Mr. Brooklyn Business, and I'm from Brooklyn, so I take pride in saying that.
Yeah.
Let's get it.
Cool to have you here tonight. Just got two things for you. Whoa, there we go. The ebook. I've not seen the ebook yet. So was wondering how we get access to that ebook.
Okay. So yeah, if the link is not working, I can get the link to you directly. So don't worry about it. I can get it to you.
Cool.
Got you.
And you mentioned about the automatic budgeting tool. I know a number of people that could benefit from that. So I've got the Mogul Deal Evaluator, and is that something similar? This tool that does the automatic budgeting that we can, get access to, subscribe or something like that, or how does that work?
Yeah, so it definitely is similar in regards of the automatic feature of it. So once you like basically enroll into Mailbox Millionaire Banking, that will be a part of your framework that you would get. So you would get the most people would get the private reserve account attached with the automatic saving, automatic budgeting. So that's the first part of Mailbox Millionaire Banking. Then after that, we have a discussion and we'll figure out where do you want to put your extra capital, whether you want to invest in cash flowing businesses, do you want to put in life insurance? That's basically how it works.
I got a question really quick. Hey, Steve, you're a cash flow collector. So this stuff you're going to get, but which wealth group are you in? Do you know?
Deal syndicators.
Okay. All right, you in deal syndicators. So
I'm also working with Auntie Shaky, just got my license approved.
shout out to you. Shout out to you. So
Thank
look,
you,
Mr.
thank you.
Brooklyn, you and Auntie Shaky's next wealth group session. Invite Steve on it and make that session around the Mailbox Millionaire Banking software, which is the automatic budgeting and some other cool strategies with it. Make that the session and get him access to it.
Okay, gotcha. I'm good.
All right, so that's what we're gonna get you right, Steve.
Appreciate you, Mel and Jamel.
Likewise.
All
Shout
right.
out to Steve too. I want to shout you out though, Steve, for real, because Steve invested, a lot of money to join the cash flow collectors, and he's been showing up and getting the most out of it, right? And the reason why I want to shout you out is because you have information and you have experience doing a bunch of different things in your life, right? You have invested, you've done a lot of different things, right? But you are always showing up as a student, right? And that's so important because no matter what you know or what you've been through, there's always something more you can learn. And that's where I'm at, right? Because a wise man knows he knows nothing. Like the more you learn, the more you realize, I don't know. You know what I'm saying? So I'm proud of you for just continuously showing up and being a student, even with all the experience and the things that you've been able to do, showing up to the events, coming out in person. and really giving it your all. And it's personal to me. And Mr. Brooklyn Business could talk about this because, my uncle and my dad, like when I see you, I think about my uncle and my dad, right? Somebody that's like an OG to us in his later years, but not afraid of change and new growth and getting into new things, right? Because a lot of times we get stuck in our ways or we kind of give up on it, like, but you really are saying, no, we making this happen no matter what. And I gotta shout you out and give you that love, bro. So proud of you. Yeah, you already.
Let's get it. Let's get it.
Bro, Steve, let's get it. All right, Connie, what's up, Connie?
Can y'all hear me?
Loud and clear, loud and clear.
Oh my gosh, let me just tell you how amazing y'all are. Y'all are so dope. Oh my goodness. I love y'all so much. Like, this is like Black excellence at its best. I just want y'all to let y'all know that I'm like really excited and I'm so proud. I'm proud to be melanated. Yes, I am. And I'm glad to be learning from melanated people who are very knowledgeable, professional, and live. So my question to you, Mr. Brooklyn businessman. So I know one of the things you said is like for a business person like me, my issue is funding. Um, the life insurance policy. So right now, because of your brother, Mr. Mogul, I went to my family and asked them for money because I couldn't get the little prime funding. I got 3 babies, so please don't let them bother me. So I got like $7,000 right now. How can I put that into life insurance policies so that I can borrow from it or use it for my benefit to help me start my businesses? Because I liquidated everything because I had LLCs. Now I'm gonna do a corporation. I'm opening that up tomorrow. So what can I do and how can I make this happen for me with $7,000?
Okay, yeah. So it's just simple. You just gotta, just put the money in there. Like the hardest part is really the underwriting process as far as from a health standpoint. But other than that, once you get approved, the banking process around the policy itself is really simple. So it
Let
don't
me
really matter about how much you actually put in. I think a lot of
jump in
people
there
have a
real quick.
misconception you have to put in a lot of money, but that's not really the case. It's all about just taking action. So yeah, you definitely can start with $7,000.
Because they say that you gotta wait for a year in order for it to accumulate, or at least 5 years or something. Is that true?
No, so most people in the industry design the policy the wrong way because when you design the right way in your benefit, it takes a cut from our commission. So most people don't want to like sacrifice their own commission. So you really have to go to somebody that's going to design the policy the right way, that's going to have your best interest, because that's how it's going to be designed in the favor of the agent if you don't know any better. So you definitely need to come to somebody like
Let me
myself.
jump in there
You
real
know.
quick. Let me jump in there real quick. So I want you to let's do this real time. Let's give her an exact step-by-step strategy. Because let's do that. Because first, I'm proud of you, Con. You know why? Because you are bold. You courageous. And most people, when I share this stuff, they be like, people be like, man, they still discouraged. Don't think it like it sound cool, but don't do it. And you went out there and you was uncomfortable and you asked the questions, and guess what? You got some money. And 7,000 a lot of money. So what I want to do now, let's give her a real strat. Like you gave her obviously what she would do, but let's break it down for her a little bit further. So she got the $7,000, right? What policy should she go? Obviously, you tap in with us. Mr. Brooklyn will help you do this. But what
Yeah.
she go to? How long would that money take for her to be able to get it out? How much of that money should we get out? What's that time frame? Let's give her a little more detail.
Okay, good. All right, cool. So the policy you would go for is a whole life policy because anytime you don't have as much access, much capital to put in the policy, you want to go with a whole life policy. But there are four major mutual companies you want to actually get the policy through because most companies they allow you to get the equity line of credit. So that's something that we're big on is making sure that we have the ability to get an equity line of credit. And what's going to happen is that when you put the $7,000 inside the policy, you're going to get access to that money between 30 to 45 days. So if you put in $7,000, you're going to get access to about like $6,000. And then you can borrow directly from the policy itself, or you can get an equity line of credit. So yeah, I would go with a whole life policy, and you would get about $5,000 to $6,000 within 30 to 45 days, along with the death benefit.
And let me go a little further, right? Because that's value right there. That's the first step that you would take because you want to secure your babies. I hear them in the back, right? So you get that insurance and you secure the babies. Then, like he said, you're gonna go get a life equity line of credit, which is pretty much a line of credit against that policy. Then what I would do if I'm you, I would now go do the secured loan strategy. So yes, like you didn't get approved with the subprime, but now that you have 7,000, you can go to Bank of America and give them that 7,000 and say, hey, I would like a secured business line of credit. And then they'll extend you a line of credit against that. Then you go to PNC Bank, give them that same 7,000, do the exact same strategy, but now you leveraging those two banks. And then when you pay them off, they're gonna extend it to unsecured. That's gonna take you about another maybe 2 months, 3 months the most. But now you're talking about in about 90 days, you done turned the original 7,000 into about $28,000 down in 90 days, right? And then you could go even further. And I'm gonna give you this, and I'm gonna cut here because this is like the high level strategies, right? There's something called fintech companies, where these are private companies that lend you money based upon your banking transactions. They don't pull your credit. All they do is pull your bank statements through a platform called Plaid. So they want to see 90 days of bank statements. So if I'm you, Connie, and I got $28,000, I'm gonna take 7,000 and put it in this month, another 7,000, put it in next month, another 7. Do that over 4 months, and it's gonna get to about 28,000. Is the same money. Now you go to a fintech company, for example, Headway Capital is one. And now they're gonna pull your banking transactions and see that you've been having 7,000 consistently going in for 4 months, and they will match that 28,000. So now you turn that 28,000. What's 28,000 times 240? What, 56,000? Whatever that number is, right? But you're talking about in about maybe 6 months, you done turn 7,000 to almost $60,000, stretching it. And how many of us working on our day job can we turn 7,000 to 60,000 in 6 months? Right? It's tough. But now I would take that money and let's start now I would start our investing strategy on whatever route that would take. 56,000 is more than enough to get you a cash flow business. 56,000 can get you a laundromat. That can get you a car wash, right? That can get you a small self-storage business. So within a year, if you stay disciplined with it, within a year, you can find yourself owning a cash flowing business, bringing in $3,000-4,000 a month, cash flow, and then you just keep building as you go.
Bars.
Yeah. We gave you a whole free mentorship session just now. You know what I'm saying?
I appreciate that. Thank you so much. Thank y'all so much.
Yeah, not a problem. Here we go, y'all. I'm telling y'all, this is the stuff you can't YouTube or Google because this is our real life. Like somebody can't tell you how this go. Ask me how you know, Mogul, because I've been there. I did it. I remember I had listen, but that's a whole other conversation. Tanja's the last person, and we're gonna close this thing up. What's up, Tanja? What you got for us? Tanja, what's up?
Can you hear me now?
Loud and clear.
Yes.
Okay, perfect. Sorry about that.
Okay.
I guess kind of like the previous young lady. I have a business idea. I haven't started it yet, but I've been doing the groundwork, the research on the business.
Yep.
And basically everybody that I've talked to about the idea, everybody that I've met with the downtown community, I'm a part of the downtown refurbishment revitalization community here in Fayetteville, and they love it. My idea is a coffee house, cat themed coffee house where people can come in and we'll have a clean room and they come in, they can interact with adoptable cats, they can pet cats. But the unique twist to my coffee house is it's a coffee house slash speakeasy bookstore. So basically it'll be like, we'll serve French pastries, gourmet coffees, my personal blend that I created, my own personal roasts. as well as gourmet pastries that are gluten-free, and carb-friendly, organic soups, salads, and vegetables, that kind of thing. But then on Fridays, Saturdays, and Sundays, we'll have live music. Local artists will come and perform. Local book writers will come and read excerpts from their book. Musicians will come and play. Local musicians will come and play. Everything will be locally sourced from the North Carolina community. My thing is that I found a great space. I've got like 150 plus people who are backing it. But when I went to the lenders, they wanted me to own the space before they would lend me money, and they wanted to use the space as collateral.
Yeah.
The people that own the space don't want to sell. So I wrote up what's called a provisional sales contract, where if I move my business or I leave the property, I have to sell the property back to them at a cost. But I put in the contract to sweeten the deal that they would, during the time that I was in their property, they would own 5% of Coco's. Did I overstep? Did I do too much? Is that a bad idea? I don't know.
Yeah, I wouldn't advise that, honestly. I wouldn't advise that. What lender did you go to?
Well, I started with the Small Business Administration, and I have a business coach through the Small Business Administration, and he approached about 3 lenders on my behalf. So I don't know specifically who they were, but he said that they all came back with the same request. Does she own the building?
Yeah. How much money do you need?
Well, the building I'm looking at, it's perfect square footage, perfect outline. But it's a shell, so I would have to get in and do a complete build out. I'm asking 350,000 to start up. And it has the potential because there was a chocolatier there before, and that chocolatier made $40,000 a month because she was right next to an Italian bistro. So.
Okay. So you're looking to buy a shell. Oh, you're looking to rent out a shell and do
Yes.
the renovations yourself and start the
Yes.
business.
Yes.
Yeah, I wouldn't. Honestly, I'm gonna be honest with you. Then I wouldn't do it. I would not.
Okay.
I would not put all this money into a renovation of a shell building that somebody else owns.
Right.
That's just me personally. That's just too much. I would go somewhere where you could actually own the business. I mean, own the building yourself, so you get the equity, the appreciation, and the benefits, all the work that you're gonna put in. And that's why the
Right.
lenders are denying you, because they don't want to lend on something where you do all this work and the owner of the building could have you fix up the property and then end up signing a new lease with somebody else a year later, 2 years later, and then now you're out of the business because you don't have that real estate. Um,
Right.
so I wouldn't, honestly, me personally, I wouldn't touch it. I would probably go and just find another building, or if
Mhm.
that person work out some type of plan with you to do seller financing where you get it under contract, you own it, something. But yeah,
Mhm.
that's gonna be a tough thing to
Well,
put
the
together.
problem is, I would love to do that. The problem is that there's a property management company representing the owner. And so we go through and they don't want to do something like that because then they're going to miss out on their money. And so, the property management company isn't going to do anything like that for me. So,
Yeah, I wouldn't do it, honestly. I wouldn't do it.
right,
Yeah,
right. So basically, I need to look for another spot.
absolutely.
Okay.
Absolutely. All right, all right. That's it. We gotta close up. We gotta close up. Justin, I'm gonna let you go, but you gotta get straight to it. 30 seconds or less. All right, we gotta wrap this thing up. So I'm gonna let you answer your question, ask your question, and then we're gonna roll. What's up, Justin?
What's going on? It's good to finally meet you. My mom is actually should be in one of your classes or something like that. One of your mentorships, something.
What's her name?
Um, Erica Mata. She actually should be in
Oh
here.
yeah, shout out to Erica.
Yep,
Yeah.
that's my mother. That's my mother.
Oh yeah, so yeah, she got you right. She got
Yeah,
you.
absolutely, absolutely. And she knows, like out of her sons, like I'm the one to do it. You know what I mean?
That's
So,
what I like to hear.
just cutting straight to it. Like I said, it's good to meet y'all, but I know we're running short on time. So I got just one question. I had to write it down here so I didn't forget it. So I was wondering because my credit situation isn't the best, and I've been trying to find ways around it. With all the information I've been given in the past 30 days. You know what I mean? Since I've been taking on mentorships and stuff like that.
Yeah.
So what I'm in the process of forming my LLC like this week. You know what I mean? I sold all the games, got rid of everything, all the distractions, opened up my LLC, finally got the initial filing and stuff like that. As far as like the anonymous structure, the top thing holding everything, so would it be better to say like get my mom on? Um, what is it what is it exactly here? Let me pull it up. Um, for the member agreement, to like add her on, get the 90% or whatever to get the funding and stuff like that, or is it possible to like get a shelf company as that and turn it into an anonymous
So
and like get funding through there?
who has the better credit? You or your mom? Oh, your mom. I'm assuming your
Mom,
mom.
for sure.
Yeah, so the fastest way, because you're even with the shell company, you're gonna need somebody with credit, right? The only way you're really gonna get credit without a personal guarantee is like you gotta have them making $1 million a year for like 2-3 years straight. So I would definitely put your mom on your business on an operating agreement and then go get funded. And she should know how to do it because she's been in her classes and stuff like that.
Absolutely.
And if y'all need help, you can always reach out. But I would definitely do that for sure.
Okay, copy. That's the only question I had. Like I said, it's good to meet y'all.
Likewise.
Thank you for everything.
We look forward to meeting you in person at some point. We was able to meet Erica in person. Amazing individual. So we're gonna get the bill with you for sure, man. Proud of you.
Yeah, absolutely. I hope to see y'all again.
All right, perfect.
All right, have a good one.
All right, bet. There we go. Mr. Brooklyn, I'm gonna take you off the screen. We're gonna wrap this thing up. It was a pleasure. We are back 8:30 a.m. Eastern Standard Time. Team, drop the link in the chat for them to apply for the mentorship. And again, drop the link for the grant. Drop both links. Put them in the chat, put them in the Telegram. I'm gonna unmute everybody. If y'all felt like this was valuable, I need that energy. We're gonna do it right. I'm talking about I don't care if you in bed. I need you to roll over, get up, and I need you to make some noise. All right. I need y'all to give it that energy because the way we do one thing is the way we do everything. We gotta have high energy, y'all. So with that being said, let's unmute, let's go out strong, and let's make some noise. All right. So on 3, 2, 1. Let's go.
Let's go.
Yo.
Let's get it.
Let's do this.
In the end, family.
Let's go.
Let's go.
Sunny Bunny.
Brooklyn, you was always
Community.
smiling.
Yes, Brooklyn.
That's what's up, y'all.
Want me to cook? Look, while I'm making the food. They talking credit, need a sweep, start waving the broom. Research on your own, just don't listen to me. No emotional ties, just the business you need. Financial pandemic, infinite banking the cure. Put $1 million in the bank is only $250 insured. Just go and perform, I put my money on tour. I feel like Shakur, they hate when you walk through the door. You got that feeling, yeah, stepping up your business, yeah. Corner boy turn mailbox millionaire. American dream is turning to a nightmare. They using our people money, now we right here. Ahead of its time, yeah, I'm talking light years. No elevator, had to get there couple flight of stairs. You got insurance on your phone, insurance on your bike, got insurance on your whip, no insurance on your life. Taking back control and we gotta do it right. Said you wanna be the plug, then you gotta pay the price. Talking to the plug, then you make an investment. Mailbox Millionaire Banking is a secret weapon. The signal is strong, just gotta make the connection. But please don't miss it, what we witnessing truly a blessing. It's roots to the money, it don't make no exceptions. Wealth therapy, you ain't gotta pay for the session. The dealer understand what the customer practice. You got bad debt, homie, you hustling backwards. Interest on the wealth, that's not from under the mattress. Just run your race, don't matter who done it the fastest. Gotta speak in the way that people they able to learn. It's disrespectful what they give us for rate of return. Whole life without insurance dictating your terms. The bank's been robbing us, it's time for the tables to turn. If you been dormant, then it's time to just stand on the throne. Gotta stand on the truth, no matter if you standing alone. Got insurance on your phone, insurance on your bike. Got insurance on your whip, no insurance on your life. Taking back control and we gotta do it right. If you wanna be the plug, then you gotta pay the price. Coach Cruz said we must protect our energy. The whole time we investing with the enemy. They get your chicken fried, no Kennedy. Been cooking the books, now we got a better recipe.
No, she said, I asked her, she said, where my fireplace is, it's a hall for her room. Her room goes like that. She said, we started to get this house, but my mom wanted a 5-bedroom.
8:30 a.m. everybody. Fill out those applications. We love y'all. Have a good night.
Love you too,